Well, Goldman Sachs, by the way, is on track for biggest one-day percentage gain we've seen in over 7 years. It came out with a report that beat on the earnings front, also on the top line front, revenues, and it also had a very nice forecast. Market Watcher's Dennis Gartman here as well as Mark Matson. Mark, is Goldman indicative of what's going on in the banking sector or some of the others? Morgan Stanley comes to mind, or JP Morgan Chase, more to the point, that disappointed?
Well, look, I'm looking at a 35,000-foot view here of things, and I want Americans to know one thing, because there's been a lot of negativity. The American dream is live and well right now today. We're at all-time low unemployment. For many minorities, they're at all-time high employment. The manufacturing arena is growing, sector of the economy, many pundits said wasn't possible, and the middle class is growing. So, you'll get these earnings projections coming out higher or lower, but I want investors focused on the next 100% move in the market, and the next 100% move is up. Don't get caught stock picking, own the market in totality, and as it goes up, you increase your wealth.
Dennis, how much of this is driven by interest rates staying kind of where they are now, or the growing consensus that the Federal Reserve might not hike at all this year?
Yeah, well, I think after the weakness in the stock market at the end of last year, the propensity for the Fed to do anything other than to sit tight and maybe even to allow the rolling off of its assets to stop, the Fed's propensity to tighten monetary policy over the course of the next 6 months is simply gone by the wayside. It's just not going to happen. They saw what the language that they had put forth at the end of the year had given rise to almost a 20% decline in equity values. And yes, I know the Fed is not supposed to look at the stock market, but darn it, it does.
It really does, doesn't it? I mean, when all is said and done, they always say, no, we don't have time for these vagaries. They have more than enough time for these vagaries.
One would certainly hope that they look at the stock market. I mean, when you were down almost, 19.8%, I thought it was amusing that people were only then saying that the market had been in a bear market. I've always said that once you're down by more than 7, it's something to pay attention to. But certainly when we were down by 20%, I guarantee you that the Fed was looking at what was going on and saying to itself, our actions thus far have probably been debilitatory to the stock market, probably detrimental to the economy, and let's take a breather. That's not a bad thing to do.
You know, Mark, one of the things that amazed me about this market is how much lately it's been ignoring. There wasn't that long ago, around the holidays, that the market was selling off on stuff that it used to blithely just dismiss. Now it's kind of returning to those days. And I'm wondering whether that's a good thing, bad thing. What do you think?
Well, look, investors need to understand the nature of the market. The nature of the market is that it's efficient. That means all the knowable and predictable information about the future is already factored into the price today. That's why to many investors, the market looks neurotic. Like, what's it going? You can't predict it. And the reality is you can't predict it. No one can tell you where the next 20% movement is going to go. And if they could tell you, they wouldn't go on TV and talk about it. They keep it to themselves and make billions. So an investor has to come to terms with uncertainty and unpredictability. The headline has very little to do with what's happening because a lot of the headlines are already into the market price. So investors have to own equities long term, 10 or 20 years. And I know most people are impatient, but that's the reality of it. And then they need to diversify globally. Can't just focus in the United States. And then when markets dip, you have to sell your fixed income and buy more while it's low. It's very counterintuitive to most people. Most people would like a fairy to get little, magic prediction fairy to give them the prediction about the future. Unfortunately, it just doesn't exist, Neil.
Dennis, there's a rule of thumb. It's not a hard and fast rule, and I think you might have educated me on this notion that financials can lead the way, more so on the downside than on the upside. But, of course, they were the first ones breaking down ahead of the ultimate meltdown in the markets a decade ago. So can we flip it around to say this surge now is a sign of better things for the markets in general?
Yeah, I think that's absolutely correct. There's no doubt historically the financials do lead on the upside. They do lead on the downside. They led going down in the last half of last year, and they've turned all for the better. So I was very bearish of the stock market from September, October, November into Christmas time, and I went to the sidelines. Remember, I trade only from my own account, so I put my own money at risk. I'm not managing anybody else's money. And I'm bullish of the stocks for the first time in several months. and I'm going to be buying more. And the fact that the financials are leading the way, I think, is suggestive of higher prices. The only thing that bothers me, Neil, I watch technicals in the market, and it does bother me that the volume is not as aggressive, not as fun on the upside as I'd like to see it. Perhaps that shall change in the next several days, but nonetheless, I think stocks want to go higher for a while.
Mark, are you worried about what's happening in Britain and a no confidence vote coming shortly? And even if Theresa May survives it, the fact that we keep ignoring all these developments might be a good reflection on us, but can we ignore it or no?
Well, I don't know what will happen in the market, but I'm a big fan of free markets. I think they ought to exit the union as fast as they possibly can and stay out of it. You know, we don't need centralized planning, you know, a form of socialism controlling Europe. And the more people that get out of that thing, the better for the whole world. So I'm a big fan of free markets and not being controlled by, you know, a small percentage of bureaucrats there in Europe. And that'll long-term create wealth and prosperity for everybody on the planet.
All right, so they hope, especially over there. All right, gentlemen, I want to thank you both very, very much.